Hey, this is Matt from InvestiQuant. Today is Monday, March 8th, 2021, and Friday, the markets saw a strong reversal off of the lows. So the markets ended up gapping up on Friday. Following the non-farm payrolls report, they sold off pretty hard into the early part of the session, and then buyers stepped in aggressively and closed the market very strong, making new highs on the session. We had lots of range. We had about 121 points of range in the S&P futures on Monday, closing up at the high. And in doing so, it made a unique pattern. This is a pattern based upon market profile day types, and that pattern is called a neutral extreme up day. And that pattern is based upon taking out the lows that were made in the first 60 minutes of trading and then reversing and taking out the highs that were made in the first 60 minutes of trading and closing above the highs that were made in the first 60 minutes of trading. So it's kind of a reversal-like pattern, and it's showing buyers gaining strength later in the day. So we're going to be able to test that here in Discover. You know, we do have the ability to test market profile patterns within the platform, one of the few platforms I know of that actually can do that. So we're going to take a look at that pattern this morning. We're going to be looking at it in all four instruments. The setup's going to be based upon entering the market long at 9:30 a.m. Eastern Time and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, currently, we are trading lower in the pre-market session, so I'm going to add gap down to this, and the opening direction does make a difference for this pattern. So if we end up gapping up, you're going to want to come in here and take a look at it again, because that will change the stats. Next, I'm going to go into the profile patterns, and this is where I'm going to be able to find that day type that is called a neutral extreme day. I can grab it from the active today section. This is the top option right here. It comes from our prior day type category here within the market profile patterns. Now, neutral extreme can be up or down. So the way to make this an up neutral extreme up day, you want to go into the price patterns and simply say that it closed above the opening print, or you could do, close in the top half or top 25% of the range, whatever, to make it that up day. But the easiest way is just to say close above the open, because you can have neutral extreme up or neutral extreme down where you're closing down at the lows. But on Friday, it was a neutral extreme up day. All right, lastly, I'm going to go into the indicator section, put it in a similar market environment, and this matters as well. So we are below a 10-day simple moving average, but above a 200-day simple moving average. And then lastly, I can hit view results. And here we go. These are the results of going long at the open of regular trading hours, exiting at the close of regular trading hours. So that's 9:30 a.m. Eastern Time to 4:15 p.m. Eastern Time, when you gap down following a neutral extreme up day in a similar market environment, which I have as below a 10 and above a 200-day simple moving average. Historically, this has taken place 38 times in the S&P, 28 in the NASDAQ, 33 in the Dow, and 62 in the Russell. If we look at the win rates on these, the S&P is coming in at 37%, so that's pretty weak. The NASDAQ even weaker at 29%. And then the Dow and the Russell are very neutral at 52% each. When we look at the average win to average loss, you'll notice the average loss is larger than the average win in the S&P, in the NASDAQ, in the Dow, and in the Russell. Russell's a little bit more mild. They're closer to each other, but the other ones, the average loss is a decent amount larger than the average win. So this pattern historically has been a bit weak for the S&P and the NASDAQ. The Dow and the Russell has been more neutral, but the bigger moves have taken place on the downside on average. So hopefully you found that helpful. Good luck today, and we'll see you next time.